Yeah.
We'll wait for the attendees to start coming. We don't have anybody in yet. We see some people are starting to trickle in. We're just going to wait a few minutes before we kick off to let everybody get situated. And then we'll go ahead and get started. Okay, I'm going to go ahead and get started. Hello, everybody, and welcome to ERPfixers Ask a Fixer Webcast Series 2021. Today, we will be discussing recording stock in transit in accounting and logistics transactions with our host, Paul Ovigele. My name is Jess, and I am with ERPfixers. So what is ERPfixers? We connect you with SAP experts to obtain quality, immediate solutions for your SAP system. We consist of experienced consultants in the major SAP modules who are ready to help and assist with their knowledge in SAP. We offer an online platform, SAP optimization assessment, material ledger, S/4HANA transitional roadmap, and cost transparency reports. For more information, go to ERPfixers.com. So a little bit about Paul Ovigele. He has worked as an ERP Financials consultant since 1997 in both North America and Europe, specializing in implementing the FI and CO modules along with their integrated areas for companies in various industries. He speaks at numerous SAP conferences. He offers strategic and functional level trainings to companies and is considered one of the leading experts on material ledger. Paul is also the author of 100 Things You Should Know About Financial Accounting, Reconciling COPA to the General Ledger, Introducing the Material Ledger in S/4HANA, and Material Ledger in S/4HANA. So before I hand it off to Paul, I just wanted to let everybody know that this is a live Q&A that we'll be hosting at the end of this presentation. If you have any questions throughout the presentation, please visit the bottom of the screen. You will see an option for a chat box or an option for a Q&A bubble. Either of those are fine to submit your questions. And at the very end, I will give it over to Paul and he'll get those questions answered for you. As a reminder, we will be posting this on our website a week from today. So please keep a lookout for those of you who want the recorded session and written answers to any of your questions. Those will be available. All right, Paul, I'll leave it up to you.
Thanks, Jess. Hello, everyone. Thank you for attending the webcast. Welcome. This is the first one we've done this year, so Happy New Year. So as Jess said, this topic is on stock in transit and inventory and accounting transactions. And the agenda will be, first we'll have an overview of stock in transit and SAP. We'll talk about some scenarios, the setup in logistics and accounting, show some accounting postings, how they look, and talk about stock in transit, the functionality, how it relates with actual costing in S/4HANA. Okay. Let's have an overview of stock in transit in SAP. So before I go on, this functionality, it's a specific, what triggers this functionality is a specific business function, right? And most of this presentation is going to talk about the business function. It's called Learn This Webcast. One of the reasons why I like this, that I decided to make this our first webcast of the year, is it's a topic I've always liked. This topic for several reasons. One is that functionality is you don't need to buy anything extra to implement it. It's part of that. Everyone's on ECI, so you don't need to purchase anything new. I mean, you still need to do some work to configure it, but it's not like a new application you have to purchase. Also, I always like it because it's in ECC and S/4HANA as well, right? I never like, even though I have some presentations on webcasts like this when I present this like S/4HANA, because I know that I'm sure majority of people on this webcast are not yet on S/4HANA. So it's both ECC and S4. I also like it because it has so much functionality. You're going to learn about most of the functionality. I'm going to mention it in this webcast, but there's even some that I don't have the time to mention. It's just so much stacked in this business function. And then the last thing is, for some reason, nobody really writes about this. It's hardly in white papers or blogs or anything about this functionality, even though it's been around for over 10 years. So hopefully this will give some insight, and we'll take some questions after, but hopefully you get a flavor of it and how it can help your business. So stock in transit, the overview is that this can be used for intercompany or intracompany stock transfers. In the process, the quantity and value of the material is retained by the issuing plant from the time it leaves, but has not yet reached the receiving plant. Now, this is normal business for any company that has inventory and has different entities, and different entities meaning different plants, different companies in the same country, or different companies in different countries. There's some element of this, right? It's not always the case, particularly if the distance between both entities is close. But if there's a significant distance, there's always an issue with stock in transit, both from the logistics side and also the accounting side, because there's accounting standards around this, right? So this functionality allows the control of goods movements, not just for inter and intracompany, even for sales to external customers, as I'll show later, even for purchases from vendors, right? Because the whole premise is, at what point should inventory be recognized as having changed title, right? I mean, this is something that is very key to how each entity records inventory in their books. Is this still my inventory, even if it's left my plant, right? If it's somewhere in the middle, is it still my inventory or not? And what do I do? How do I record that in the system? Okay, just a sidebar. There's always, from a logistics standpoint, there's always been a way to identify stock in transit, right? Or at least that's what I'm told by my logistics colleagues, is that there is an easier way of tracking it. But in financial accounting, it's not as easy. And even if something was done, it's not aligned with what's happening in logistics. It's some kind of after the fact thing that's done, right? So this functionality kind of integrates the two. So this screenshot I have down here, this diagram, just shows a little bit of what I'm talking about, where if you have the sender on this end and the receiver on this end, is when it leaves the sender's plant, it could be a scenario it's still part of the sender's stock, or when it leaves the sender's plant, it's in the sender's stock, and then it's in the receiver's stock, and then it's in the sender's in transit, then the receiver's in transit, and then the receiver. Or once it leaves the sender, immediately leaves, it is in the receivers in transit before really being in inventory. And the rules that define these scenarios, and more of the ones that I will show, are really, it's based on, the accounting rules, the agreement between the entities, and it could be part of the same multinational organization. But those rules will determine which of these scenarios applies and some of the other scenarios, right? The good thing to know is that this stock in transit functionality accommodates almost all these different scenarios, right? There's work to be done to get it set up, but it does accommodate different scenarios, different levels of in-transit stock. So what are the benefits? So some of the benefits are there's visibility of stock in transit from even when you send, if you send from a plant to an external customer or a customer or another plant in your own company. So you have that visibility of stock in transit. For intercompany and intracompany, there's also visibility in the receiving company code of plant. So obviously, if it's to an external customer, you can record your in transit, but if once it's left your inventory and it's no longer the title has transferred, obviously it's a black box what's happening on the customer's end. Maybe they have SAP, maybe they have another way of doing it, but I don't want to sound how, but it's like they have to deal with it. The customer has to deal with their stock in transit. But if it's within your organization and the entities are part of a customer, you can only track it up to the point that it's your in transit stock. Also, it enables actual costs. So part of this business function, apart from stock in transit, it also enables, if you have material ledger active, and I'll talk about this towards the end of this webcast, if you have material ledger active, it enables actual costing across company code. So meaning that even if company codes are distinct, right, in the system, actual costing, if one company sells to another company, in a certain valuation view, which is called group valuation, you can view them as all one company. And it's almost like you're sending stock from one plant to another, right? And you can show the full transparency, full visibility of the receiving company as if the raw material or the material that they produced or sold came from their own plant, right? So it gives you a nice group view. And then it also does something else with actual costing, which is called transferring of actual cost components split. I'll explain that later on. Okay, some other benefits is it supports your standard logistics functionality, like handling units, batches, sales order assignments. So you can have this, whether it's sales order stock or even project stock, whatever type of inventory segment it supports standard moving average price, serial numbers, all types of costing, cost objects, actual costing, and then also SPED functionality. So it's heavily embedded with standard SAP, nothing, there's one or two kind of enhancements if you need them, and I'll talk about those later, but for the most part, this is standard SAP. I have, and another thing, just to kind of continue on that point I mentioned before about not so many people have this implemented. With all the companies I've been to, especially those that deal with inventory, most of them don't have this functionality, but a lot of them, they actually do workarounds that do what this functionality is doing. So they have some other way of accounting for stock in transit. And that kind of begs the question of why aren't more people using this functionality? So let's talk about some of the scenarios. So I mentioned some of them, and I think these are the main ones. There's some others, but the main ones for stock in transit is intercompany. So your inventory passes from a plant in one company to a plant in a different company. within the same overall group. Secondly is intracompany, so one plant to another plant within the same company. Third is external vendor transfers, so you buy from a vendor, basically. And then the fourth is external customer transfers, where you sell to a customer. So I think that kind of covers the major supply chain scenarios when it comes to SIT. It's either within your organization, different companies, it's within the same company, different plans, it's to an external vendor, it's to an external customer. Again, there's probably one or two others, but these are the main ones. So let's start with intercompany transfers. So this diagram I have here is just kind of to help show the flow with the different scenarios that could occur. So with intercompany, let's look at, so this top part here is saying it's going to be an outbound delivery, just as you do with a intercompany STO or a purchase order to another company, or sales order to another company in the same group. Then I have company A and then company B and what's in transit. So the first scenario is when the transfer happens, the inventory is in transit in company A. So that's a sender in transit. So the movement type, so this business function actually activates new movement types that don't exist if you don't have this functionality. Most of the movement types begin with 6.8 something, right? So the sender, does the usual process, but the movement type 681 is activated. It's still in the company's A in transit, and then at the point, and I'll mention what that trigger is, at the point that company B does this movement 685 and receives it into inventory. So that first scenario is when the inventory is going from company A to company A's in transit and then to company B. Another scenario, it goes from company A, but then it goes to company A's in transit and then it goes to company B's in transit before it goes to inventory. So think of it as a multi-layered process. Company A first does the same movement type 681, and then it's in transit in A, then it's in transit in B, and then company B receives it. So think of it as maybe this is a longer time span, a wider geographic kind of area, and what happens when the inventory is in different stages of the transportation process, right? And then the third is if once company A issues the inventory, it leaves their inventory and only is in transit in company B, and then they receive it into inventory. So all these different scenarios for intercompany, what governs these scenarios, and I'll mention this aspect later, is the movement types. As you can see, there's different depending on what scenario it is. But more importantly, it's the order type that ultimately triggers these movement types. So there's also going to be a new order type, whether a sales order, in this case, it'll be a purchase order or STO order type. And depending on which one you use, that will dictate which of these scenarios takes place. So the next few slides, like 3 slides or so, is just to show just some screenshots of what's happening. Standard SAP again. This is, once the goods movement is done, it's done like normal, just that the order type triggers a different movement type. You still get it, the same kind of doc flow that you get today. The only difference here is that issue, the goods movement issue, goes into an in-transit, because of this movement type, it goes into an in-transit status, both in logistics and also in financial accounting. And then only when the title transfers is this transaction, VLPOD, that's the proof of delivery transaction, only when that title transfers is this transaction carried out. This transaction says, yep, we have received this product into inventory. And the good thing about this transaction, if there's any discrepancies in quantity, right, it can be recorded, because this truly records what was issued from the in-transit stock to the receiving entity. That proof of delivery transactions, VLPOD, some companies probably use this right now, even if you don't have SIT, I guess. I haven't been in a situation where it's used without it, but I think, I don't know that the business function turns on this transaction. I think it's there anyway. But just something to note, for example, if, like one of the scenarios I discussed was, it moves from in transit from the sender company to in transit of the receiver company. In that case, the VLPOD, this transaction will have the sending plant, two movements, one from the sending plant, one from the receiving plant. So this functionality, it's probably just once company A issues inventory, that's it. Company A has recorded the issue in its books. Doesn't matter what's happened in between company, while the inventory is in transit, it just goes, like, from an accounting standpoint, inventory is credited from that company, and then whether it's cost of sales or whatever is debited. There's no other inventory impact in company A, but with this, it's really kind of still in company A. It's just kind of staged in company's A's stock in transit. And then when the receiving plant is ready, and this is the point where the inventory now belongs to the receiving plant, this goods movement 109 is how that switch will be done to make to indicate that the inventory has moved from in transit to company B. And again, standard SAP trends, everything looks and feels the same as your normal logistics processes, except for one VLPOD, the proof of delivery transaction, and also the movement types. So I mentioned intercompany. Now think of the same process. I wouldn't even go through all this because the flow is the same, but what if they were in the same company? So it's just a plant A to plant B. So there's also movement types for that scenario. Also begin with 6-8. For intracompany, the third digit of the movement type is a letter as opposed to a number, but everything is pretty much the same. It could either stay in the sender's in transit. It could either go from the sender's inventory to its own in transit, to the receiver's in transit, to the receiver's inventory, or it could go straight from sender A to the receiver's in transit and then to the receiver. So same kind of sub scenarios, but just the only difference is that it's in the same company. So you're using an ST, like intracompany STO. And again, just something to note, I'll keep mentioning these movement types, but don't think of it as, okay, so that means users need to know exactly what these movement types, no, they don't need to know that, right? The movement types are part of the schedule line item category, are part of the delivery, delivery type, and which is part of the order type. So you just need to know the order types. The order type could be clearly labeled, inventory and sender, SIT for sender, SIT for receiver, SIT for both sender and receiver. Vendor transfers, this one is, I've been involved only once with this one. It's not one of the common scenarios they use, but it can be used as well, which is when you buy from a vendor, if that purchase, if the goods are not yet in stock and they are in like a holding place where it's not really in your inventory and you want to recognize in transit, there's also a process for that. In that process, you also need to use the inbound delivery functionality. So it's not just a goods receipt, because there has to be recognition of when that receipt happened, right? As opposed to today, once you get the goods receipt, once the vendor delivers, you recognize it as inventory. But in this case, there's like two steps. So that's vendor transfer. The next one is customer transfer, and customer transfer is obviously, okay, I'm hearing that my audio, okay. Sorry about that. I'm hearing that my audio is not working, so I'm going to try someone else, so please bear with me. All right, I have dialed back in, so please, if Jess, could you let me know if you can hear me now? All right. I can't hear anyone. So what I'm going to do is I'll try someone else, and we'll see if that works better.
Hi, everybody. We are having some technical difficulties. Paul is about to jump back on. Looks like he's jumping in right now, so we can continue the presentation. We apologize for that. He will be with you shortly.
All right, so hello, hopefully you can hear me now. I'm just about to, I'm going to join back in, so please just bear with us. All right, and now I'm going to share my screen, so just all right. So setting up SIT and logistics. Now, it seems like you might have missed out some of what I said. So I'm not sure when exactly, but I'm going to, sorry, give me a second here. Yeah, I'm just going to go back a couple of slides. And so what I was saying was all the different scenarios in a company, which I mentioned, and then with the intercompany transfer, what happens is there is an order type, typically a purchase or sales order type, which is linked to this movement type 681. And once it is issued with that movement type, based from that order type, it stays in either the receiver's transit, the sender's transit, or the receiver's transit, depending on what the movement type is. And once title has been transferred, either the sender or receiver, depending on whose transit it is, uses this transaction VLPOD to almost acknowledge that title has transferred. This is now either in our inventory or our stock in transit, and then a subsequent transaction would indicate that it's left stock in transit and it's now in the receiver's inventory. So I said that for sender to receiving plan, and then also that intracompany transfers works just like intercompany. The whole thing, it's really just the same scenario. It's either in the sender's in transit, it's in both the sender and receiver, or it's in the receiver, right? And the only difference is the movement types are different, right? With intracompany, they end with a letter, and then obviously it's plant to plant within the same company. Vendor transfers. I mentioned this is one that I've rarely experienced, right? Only maybe on one implementation of experience, and it would involve having to use inbound deliveries as well as goods receipts with in transit, because it's a two-stage approach. You're not just receiving the stock into your inventory, you're receiving it into in transit and then into your inventory. And for external sales, that's another one that is pretty useful, but rare, not a lot of companies do that. That's when you sell to a customer that the customer acknowledges that, or you and the customer have acknowledged that title has transferred. And just a note on this one. So this also has different movement type, right? Which is really linked to a different sales document type, right? So again, you don't see this movement. The user doesn't see the movement. They just use a different order type, right? And that's all linked to eventually to the movement. And one of the things with this particular one is that it also helps with revenue recognition, because as you know, when you're selling inventory, you shouldn't recognize revenue until you recognize cost of sales. So if you do a goods issue, right? You do a goods issue, you should not necessarily recognize cost of sales if title hasn't transferred. But if you don't have this functionality, you have to come up with other methods of doing revenue recognition, right? So I want to point out, I'm not saying this is SAP's revenue recognition solution. It's not. Because revenue recognition, you don't have to have inventory. It could be like services, it could be something like contracts. But if you have it, if you're in an inventory based business, then you know that revenue should only be recognized when title has transferred, and title will only transfer in the SIT case once it's acknowledged that the customer now owns the inventory. So basically, when you do a goods issue, that's not the point where you'll bill. It's only when the proof of delivery is done. So only when there's an acknowledgement that the customer now owns this inventory, that's what's going to push it to your billing due list and bill. So your billing will be in sync with this SIT process. It works pretty well. I have come up, for anyone who's read anything else I've done, I came up with this other way of syncing up financial accounting with COPA. But this actually, you could do this instead, right? Because only when you bill will COPA be updated, and that's also when your cost of sales will be recorded into the general ledger. Right, so how do we set this up? In the logistics module, how do you set up SIT? So I'm not a logistics consultant, but this is stuff that, I've just, over the years, this is what has had to be done. I'm only gonna give one scenario, because if you think about it, there are different, you could have it for customers, for vendors. I'm gonna just use one here. Let's just assume we're talking about deliveries. So you have to activate this business function. Every time I say this business function, I've been saying that since the start of this webcast. What I mean is this log MMSIT. It's only 7 letters, but it does a lot. It does a lot of stuff. So you need to activate it. Then you need to create a new delivery type. You need to assign the delivery type to a sales order type. So remember, as I said, the users are not going to be seeing this new movement type, but they will be seeing these new order types. So if you're thinking, so how is this going to change business process? There will be new order types. If it's purchase orders or STOs you use, there'll be new purchasing document types, okay? And then you'll have, in this case, you'll have a new item category. You'll have to assign it to schedule line categories and delivery categories, and then create the new sales order type, which you'll assign to this delivery type. So let me just step through these. So first of all, activate log MMSIT. It's a business function. It's normally done by basis. So if you were going to undergo a project for stock in transit, you would have your, this is like a real project, right? So you'll have your basis team involved. You'll have them activate this. You can't undo it when you're activated. So make sure, it's something that's definitely needed and tested in a sandbox or test system before you move into the transfer landscape. Then you create a delivery type. Now, the delivery type is a connection between the sales or purchase order type and the schedule line item category, right? So schedule line item category, that's where those movement types, that's what holds those movement types. The delivery type is what is connected to these schedule line category, right? So then you create a delivery item category, and this transaction right here. Yeah. So the delivery item category is normally the same as your delivery type, right? So I put NCUU here, NCUU here. So you create that, and when you create that delivery item category, make sure it's POD relevant, because remember, POD is proof of delivery. That's what indicates that it's relevant for that transaction via POD, okay? And then you assign that delivery type to an item category of that transaction. And then you define the schedule line category. So as I said, the schedule line category, there's going to be one for each movement type. So let's take one called issue CST delivery, right? So this is one that issues the inventory to SIT, and from there you can sell once approved. So once you've said title is transferred, it can be sold to a customer, right? So issue to the C is customer stock transit, I guess. So in the schedule line category, it has both the movement type that issues it to SIT and the movement type that issues it from SIT to wherever it's going. So that's one of the new ones, 687. And that one, most people are familiar with because that's the goods issue to a sales delivery, okay? Then once you've done that, assign your, this schedule line category is assigned to that item category that we created in the previous slide. So again, all these things are linked, right? Then you create the sales document type, and in the sales document type, in this, my example is a delivery to an external customer. If it's a purchase order, it'll be a purchase order type. But the important thing is that sales order type you create is what you're assigned to that item category. So think of it, sales order type assigned to item category, which has a delivery category, which has a schedule line item category, which contains the movement type. So if you're not a logistics consultant or you're not doing config, don't worry about it. I'm only showing this to show that these are all standard SAP configuration that help you that you need to do as part of this function. So that was the logistics part. And for any logistics consultants or logistics people, there might be more. I'm giving you like the accountant person's version of what you need to set up in logistics. So from an accounting standpoint, now this is my world. So if you wanted just to set up SIT and you wanted to know what do I have to do in accounting for this to be set up? This is the minimal that needs to be done. Create a valuation class for SIT, assign it to an accounting reference, create GL accounts for SIT, assign the SIT accounts to inventory and COGS, I'll explain that later, and then assign the SIT valuation class to material master. You'll see that logistics has the most, for this SIT functionality I've explained so far, most of the work is in logistics, right? Most of that setup is logistics. Accounting, there's not much setup. So first of all, valuation class, everybody knows what that is. If you're using SIT this way, you're gonna need to have new valuation classes that are SIT specific, right? SIT specific, I'll explain also where that, how you can see where that is assigned. But to create these valuation classes, it's always best to create a valuation class that reflects the valuation classes you have for normal inventory, all right? You can group things if you wanted less, but it's probably better if you have a finished good valuation class, semi-finished good raw material, you create an SIT valuation class to reflect that. So basically use the same account category referencers that you use for your normal valuation class for its equivalent SIT valuation class. Okay, so once you've done that, the other thing to do is create GL accounts for inventory and COGS. Now, what does this mean? It means, remember I said, if you have SIT, it means if inventory leaves your plant, but it hasn't been, title hasn't transferred, you can't just say, okay, this is no longer my inventory. But you also don't want to, you want to recognize that this is not, it's not in my inventory. I still own it, but it's not in my inventory. So you have to create an account that's an SIT account. And for all the customers I've worked with that do work around SIT, they have an SIT account. So the concept shouldn't be difficult. You just need another account that's not your inventory account. It's normally a balance sheet account. It's also normally in the same number range as your inventory account. It's not an inventory account. Okay, so that you definitely need to do as a separate account. Now, COGS is a little different because COGS, you can use the same COGS account. Now, when I say COGS, I mean when you're selling to a customer, because that's the scenario I'm talking about, sales to customer. If it's just STO, intracompany, you don't need COGS for that because there's no COGS significance when it's a plant-to-plant transfer. Now, if it's intercompany, there is COGS, right? But for plant-to-plant transfer, there's no COGS, inventory to inventory. So if you want to have a COGS account, you can use the same COGS account, or if you wanted definitely transparency into what has been SIT related or not, you can create a different COGS account. And that COGS account is assigned to the valuation class for SIT. So just like you see here, once you've done creating the inventory and COGS account and you create your valuation class, now go to OBYC. So this is that account determination transaction, and assign your inventory account to BSX, your COGS account to GBB. So they're assigned to exactly the same places that they're assigned to today, except the valuation class is different. So again, pretty simple setup. Then the other thing, again, something a lot of people don't use, but once you use SIT, you have to use. In the material master, in your accounting one view, you have where you have your valuation class. You also have another field below it called VC sales org stock, which again, unless you use it for something else, this is normally blank, but this is where you put your SIT valuation class, right? So you have your normal valuation class for finished goods here. You have your SIT valuation class for finished goods here. Okay, so let's look at how, once you set, so maybe 4 steps for accounting. So once all that's set up and logistics is set up, how does the posting look? Let's go through some of these scenarios. I'm looking at a goods issue to a customer, right? So when the goods issue, when it's an SIT related goods issue, right? So this is a goods issue that's tied to a sales order type that's SIT specific. The goods issue transaction is pretty much the same, right? Because the system recognizes the order type the goods issue relates to and the movement type assigned to the scheduled item category for that order type. And then it knows that when it credits inventory, so it leaves inventory, it doesn't go to cost of sales immediately. Instead, it goes to this account, the one we configured in the last section, right? So it goes here and goes here. Only when the proof of delivery is done, right? When the proof of delivery is done, it's going to have this movement type 601T, T is for transit. That's when it leaves inventory and goes to, leaves SIT and goes to cost of sale. Right? So this proof of delivery is only confirmed, is only posted when the customer confirms. Now, for some companies, if it's an external customer, say, we don't know, we sell it. We don't know when are they going to confirm. Some companies, the customer, especially if it's like a long distance between your plant and the customer, they will send a confirmation to say that everything's okay and they've received it. And it's at that point, BLPOD happened. Some customers complain, well, not customers like this customer, but some SAP customers complain that, well, this is too much work. This is an extra step. Just so you know, you can schedule this transaction automatically. If you have certain trigger points, maybe that trigger point is the is what the terms are for when title transfers. You can link this transaction to that and say only run this transaction at a certain trigger point. And that trigger point can be what you define, or you can schedule it automatically so it just runs every time. But just remember this, even when you do the goods issue, like today when you do a goods issue, right, automatically that sales order or the delivery is in VFO4 waiting to be billed. If you have SIT set up, when you do the goods issue, it's not waiting to be billed until you do this VLPOD. So again, that's the revenue recognition piece that I said, which is pretty cool. Intracompany transfer. I'm going to rush because of time. I'm going to, I think once you know how one works, you'll know how they all work. If it's intracompany, again, with intracompany, 2 plants in the same company, it's normally debit inventory in one plant, credit inventory in another plant. However, with SIT, when you do the STL, it credits one plant, it debits the SIT account. Only when you do the VLPOD in plant B does that inventory credit the second plant. So receipts from vendor, same kind of situation. Instead of debit of inventory being recorded immediately, it goes into SIT until you do the inbound, the goods receipt with an inbound delivery. All right, so that's the SIT part. Now, an extra feature of SIT is that when combined with material ledger actual costing, it does more things, and I'll try to go through these in as quickly as I can, but without necessarily rushing through what could be important to learn. So take a global supply chain, 2 legally independent companies, and they sell each other's goods. The company B sells it does further processing. They belong to the same group. They have to be in the same controlling area and the same client, right? And the time to shift from one to the other is a long period. In today's SAP environment, without this business function, there's missing transparency into what's goods in transit. During the in-transit time, you could have discrepancies, values just not reflecting reality. You don't have quantities accessible for planning purposes, and other things, right? Reversals may not equal the original value. There's several reasons why without this SIT functionality, the system doesn't reflect reality, right? If you have this, again, the same business function, if you have it, every value is tracked, whether it's in transit, whether it's in one plant's possession or the other, okay? And what happens here is that with this functionality, one thing it does is helps with transfer pricing for intercompany transactions between one company and the other company. It helps with that process of transfer pricing between companies, calculating the markup. The markup basically means the standard cost in the selling company minus the transfer price. And in order to have all that set up, you, in most cases, need to activate what's called a group valuation. So again, we're talking of this same SIT functionality, but with material ledger active, right? So if you have that set up, here's another advantage. So think of the first part of most of this presentation is on SIT functionality. This functionality actually it doesn't have to do with SIT. It's just an extra functionality that this function enables, right? And so to give an example, if this is your selling company and this is your buying company, all within the same group, you have the cost components of your selling company. So these are the costs that make up all the breakout of your standard cost. Now, when you sell, so this selling, you sell to the buying company. Without this functionality, the cost component in this company is only going to have one number, which is this basically your purchase price. Because this is this different company. It's like a vendor. If your vendor sells you a product, you're not going to know what is material, labor, overhead. You're just going to have one number, which is fine. But if you have this SIT, it will break it down in your group valuation view. It'll break it out so that these values here are exactly equal to these values here, right? So that's very. In fact, I've had implementations that's only of this and not of not the SIT part, right? So, and the good thing about that is if you have actual costing, so if not only if you have material ledger, if you have actual costing, if the cost of the selling company changes, so if you revalue the cost here, it also revalues the cost here. Now, if you don't have the SIT functionality, when the cost changes here, it's just the delta, the intercompany profit is going to reflect that change. But if you have SIT, then anything that changes here is going to change over here too. Okay. And then I have a few more slides about, what's called the delta cost component split. This is that, when you have two companies that have cost components, you have an extra cost component that shows the profit that this company is making, okay? And another thing to add to this is that some companies, I mentioned here that if for this to occur, currency valuation profile with group valuation needs to be enabled. Some companies don't want that because if you do activate group valuation, you may have to do something called an SLO with SAP, which is a long, expensive project in order to activate something that didn't exist before. Some companies, they say, no, we want to use it in our own environment without having to activate group valuation. If that's the case, you need to activate something called a transparent legal view. So this is just a baddie you activate. And basically what the baddie does, it does the same breakout of selling company to buying company. So just if you look at this diagram here, we had the selling company here, just like we had in the last, the 2 slides ago. If you didn't have SIT, it's only going to go into one bucket, right? And then I'm going to skip this. And if you go to group, it's only if you have this group valuation that breaks it out. But if you activate legal transparent view, which is this baddie right here, you can break out your legal costs just like your selling company. So again, that's extra functionality that you have with logged MMSIT, and even with or without group valuation, you can have a transparent cost component split. There are other baddies you can use with this. I'm not going to go into it, but there's another bunch of baddies that you can have that do other things if you want to, if you're recording markup between companies. All right. Just a few things about this, just a couple. I mean, if you're doing in this process, if you have freight, so you can post the freight separately with like a Miro for your delivery costs. However, in between, for this functionality to work, the invoices, the intercompany invoices between two companies needs to be done through the IDOC process, right? So this is when once there's an intercompany STO or intercompany PO, the intercompany billing document and intercompany invoices automatically generated using an IDOC, right? That's the only way that the system connects both companies and the cost components can be transferred. Okay, and another thing that needs to be done in this case is you need to have trading partners between both companies. Again, some companies, even if you don't have log MMSIT, you might have this already, but this is definitely needed in order to have that transparent view of cost components. So to summarize this, this last piece that I'm talking about from here, with actual costing is only if you have material ledger actual costing. Nothing to do with all the other stuff I've talked about. I introduced this just to show how this business function is not just SIT. There's other things. And in fact, even on top of this actual costing, there's at least a couple of other things it does that have nothing to do with SIT. I'm actually not sure why SAP packed so much functionality into a logistics business function for stock and transit, but hey, it's all good stuff. Okay, so let's go to for this actual cost SIT function, log MMSIT functionality. I just have a summary because I went through so many different things. The summary, if you want to set this up, is to activate the business function, activate the baddie if you need it. You need to have, remember, in this case, you need to have the same controlling area, the same client, right? Activate material ledger. So if you use material ledger, you don't have to do anything there. If you don't, right, but you want this functionality activated. So again, this is only for the material ledger part of this presentation. The first part of the presentation where I'm talking about the movements, you don't need material ledger for that. This is just for if you want cross-company cost components, right? So you'll need to go through all these different steps in order to activate actual costing across companies. So something else to note, S4HANA, I mean, you can't do an SAP presentation without mentioning S4HANA, so here it is. I think I have a couple of slides. This function, log, is automatically active in S4. In S4, there's a business function set called always on functions. And this is automatically active in S4. So that's just basically what you need to know there. In S4, material ledger is also mandatory in S4. So I mentioned the two main things I mentioned in this webcast is log MMSIT, material ledger. If you're an ECC and you want to use all this functionality, you need to activate them to use it. If you're an S4, you have to activate them. You have no choice, right? Doesn't mean you have to configure the system to do like the delivery types and schedule item categories and movement types, but you have it. So in S4, you have it. In ECC, you need to activate it. Okay, for more information, you can look at my book. I wrote it a couple of years ago, but still has some good stuff on S4 and this functionality. So that's I think about what we got here. So I'm going to hand back to Jess. I'm sorry if I rushed through some of the others, but I'm very cognizant of the time. So Jess, could you let us know if there's any questions? I'll answer what I can here, maybe for the next 5 minutes, and then anything I don't answer, I'll answer it separately and we'll post it on the website.
Okay. Could you please allow me to share my video, and I'll go ahead and get started on the questions.
Okay.
While you're doing that, I'll start with the first question just for the time. So the first question is, can you deactivate the stock in transit business function?
Yeah, no, you cannot. You can't. I mean, as far as I know, you can't deactivate it because yeah. I mentioned this during the at some point during the webcast. Is you can't. There's just so much functionality packed in there. And remember, in S4, it's required anyway.
So, how long does a stock in transit project take?
A project, SIT project, well, like anything else, it depends, but I'd say, depending on what you want, if you want that first part of it, I'd say give it about 3 months, 2 to 3 months.
So I'm going to go ahead and leave it at those questions just because of time. For those of you who jumped on a little bit late, I just want to remind everybody that we will be posting the recorded webcast along with the questions and answers to those questions on our website. So if you just keep a lookout for that, and we'll get that situated for you guys. Well, thank you so much, Paul, for giving that awesome presentation. Thank you to everybody who has taken the time to join us today. Please join us for future webcasts, and we hope that everybody has a safe and wonderful